I joined Bank of Cyprus in a totally different era in 1999, during the middle of the boom, when the shares of the bank were suspended from trading because the market was overheated. So a totally different landscape. I was lucky to have worked for many years as manager office, in essence, of the then, one of the then senior managers of the group, and that gave me a lot of exposure to learn, to experience all sorts of situations, internal, external, overseas as well. That was the era when the bank was growing its overseas presence, primarily Greece at the time, the Athens listing back then. So there was a lot of learning through that process, and I think that journey helped me a lot professionally to get exposure to all sorts of different challenges, and both technical but also professionally. The events of 2013 meant that the bank's balance sheet was very stressed, very challenged. We had emergency liquidity assistance from the ECB of the tune of 70% of the country's GDP. We had NPL ratios of the tune of 63% of our balance sheet. I mean, the numbers were huge, and the whole situation was very fragile. So I think the ability of all of us at the bank to reverse that, to achieve what we have achieved since, repay the ELA a couple of years ahead of plan, get to NPL ratios today of 6.5% from 63%, get to a place where our liquidity is at 7 billion, our excess liquidity is at 7 billion euros today, get to capital ratios that we never reached before at in excess of 20% on total capital. I think this was the largest achievement, and it wasn't the action of one person, it wasn't the action of one decision, it was a combination of moves, of decisions, of hard work, of all of us at the bank, of all of the colleagues, front and back office, in order to get here. I believe we've got to a place where we have a bank that today is healthy. The financial metrics are they're up to standard with peers. One would say they're better than many of our peers. We are SSM regulated, and we've moved on from recovery from the crisis to serving the client, to becoming digital, to offering best-in-class service, and to turn the page to growth, prosperity for both the bank, but also the Cypriot economy as a whole. Bank of Cyprus is a 40% market share bank. We're the largest institution in Cyprus. As you know, we offer all the spectrum of banking services. We're also leaders in life insurance. We have a very big non-life insurance company. These are Eurolife and GIC. So our role in the economy here, I think, is self-evident just by who we are. Bank of Cyprus is part of the furniture in Cyprus. It's part of the establishment, I would say. We grew with the economy, we suffered with the difficult times, and we look forward to growing again as now the economy recovers post-COVID and post the Ukrainian challenges, the war challenges. So we envision, we believe that we can be catalysts to the growth of the island and to the prosperity of the island, and that includes the government, it includes the private sector, more importantly. We've always been there for both the country and the business people, and obviously the individuals, and that's what we hope to be in the future. Having said that, on a more specific level, let's say more micro level, our vision today is to be everyone's go-to financial institution. We want to be the app that everyone pulls up on their phone when they look for whatever it is they're looking for from a bank. We want to be the utility provider in the sense of financial services, obviously. So we want to be the go-to person, the go-to entity in whichever aspect of everyone's lives this may be, whether it's banking, insurance, transactions, lifetime choices, which often have financial implications, buying a house, sending children to university, whatever is the decision that people need to make. So we aspire to being their go-to institution and to being there for our clients, guiding them and helping them make the right choices. much more so than in the past when banks were more facilitators and administration providers. We look to disengaging from that by using our digital technology. As you know, we are investing a lot in that front so that we free up our resources, our energy, and our passion to deliver good advice, to deliver well-designed products for our customers, and to be there for them when they need to talk to a banker or to talk to an insurance expert. As part of the Q1 results, which indeed were very good, despite the challenges geopolitically at the moment, we also updated our forward guidance. Forward guidance is the indication we give to the market as to where we expect this bank to go short term, but also medium term. As part of that medium term guidance, we have assessed both the downside risks that are coming from the geopolitical situation, including inflation, which in itself is something we shouldn't be ignoring as a risk, but also the upsides that come from the upcoming end, also the market expects, of the negative interest rate world, which has been extremely painful for the banking sector in the Eurozone, and more so for banks that are very liquid, like Bank of Cyprus. So with that in mind, we are now in a place where we are guiding, and we expect that we will achieve the 10% ROTE ratio in 2024. This is the return on tangible equity. It's the epitome of our results every quarter. So we believe that we can achieve that a year ahead of what we had initially planned earlier in the year by 2024, and that should give there will be a path from here today, from Q1 to 2024, with a number of actions, both on the revenue and the cost side, including new lending, including obviously the positive interest rate movements that are expected by the market, which will take us to the 10% ROTE. On NPEs, I think it's a lot less challenging, if I may say. Remember, we started with 63%, we are down to 6.5%. Our ambition is 5% end of this year and 3% medium term. The numbers are now very manageable. We are achieving, this quarter in Q1, we had 100 million reduction in our NPE stock, which brought the ratio from 7.5 to 6.5. It's always a challenge, but I feel it's something that's within reach now, and that we can more confidently see a path to that, and so can, I think, our shareholders in the market. For any bank to survive in today's world, it has to invest in digital. It has to make services available on self-service channels to customers. It's a one-way street. There is non-bank competition coming into the banking market in the Eurozone. It's an inevitable investment that we had to incur. We were very successful in that front. We currently have 383,000 digital users of our digital channels. This is, compare this to the population of Cyprus, and it's a growing number. We had a 3% growth year on year, and we have sustained the growth that we had achieved earlier in the early COVID period. So we look forward to doing more, to making more available on our digital channels, and to enabling customers to have an even better customer experience by using all of these channels. That does come with a downside. It does mean we need less bricks and mortar. We need less branches, less people in the branches. We do want to continue servicing our customers digitally, but also in person, but not necessarily by having a branch in every neighborhood, in every village, but by having more smarter branches, branches that are located in bigger hubs, which can service clients in a broader array of services and not just in their teller needs, in their cashier needs. We also introduced currently, very, very recently, a cashback feature, This is another free tool where people can withdraw cash from a lot of retail stores, supermarkets, or other stores, which again is another way of enabling the cash flow into the economy without actually visiting a bank branch. And it's all part of the plan. There's more to come. There will be more features that will make life easier for the less digitally savvy, let's say, customers. But we will never stop servicing them. We always have alternative channels to service them, including this call center, which is, again, working extended hours. So there are ways the older generation can reach the bank and can get service without physically meeting their banker in the branch. We took the brave step in February to announce ESG targets, but mostly the climate part is what's currently relevant. We have committed publicly that we will go to a carbon neutral position by 2030 and to a net zero situation or position by 2050. This was a very big ambition, and we now need to implement all the steps that we have designed to get us there. We also target to improve what's called the green asset ratio. So this is the ratio of our green assets to our total assets, which is, again, a path. And on more ESG metrics, we also committed to increasing the percentages of female participation in decision-making bodies within the bank. So these are the three headline KPIs we have published, and which I think are the umbrella targets that we are all working towards. So that aside, we now need, let's come to what we always have been doing. And I always say that Bank of Cyprus, within our DNA, social CSR was always very, very deeply embedded. And anyone you ask, I think, in society, they'll tell you about the Bank of Cyprus Oncology Center, the Anti-Cancer Society and our inputs there, the Cultural Foundation, IDEA, our incubator. So, and many more, Support CY more recently, many initiatives which are very, they have survived time. I think we believe that they add value to society, either in the education or the healthcare sector, and which we're very, very proud of as being sponsors and supporters over time. It's not enough. We need to do more. CSR is where our roots are. We now need to also include climate into this equation. And we have a big action plan, a lengthy and detailed action plan, which will take us from today's position to the net zero and the carbon neutral targets in 2030 and 2050, including green products, green financing, investing in green assets on our own balance sheet, providing, being more green as a bank, our own buildings, our own footprint, our employees' footprint, and eventually our clients' footprint. We are, as I mentioned before, we are a 40% market share bank. We can be the catalyst to the country becoming greener. By providing this financing and providing green incentives into our products and into our lending, we can incentivize the whole economy to become greener through pricing, through all sorts of means that are currently available. So we can be the catalyst. We want to be the catalyst to becoming, to the country and to the bank becoming more climate friendly, and it's something that we need to start. We are already late as a world, globally, in getting there, and we need to start yesterday in implementing that, and we are. And you will see things. You will see initiatives, more initiatives on the banking side as well coming soon.